the thing I want to share with you today, I learned from, funny enough, Tony Robbins' Money Master the Game and Unshakable. I've read different books on money, but those two are something that enabled me to learn about something that's significant, and I'm going to tell you that right now. It's MER, Management Expense Ratio, and that's how much the fund managers of actively managed or passively managed mutual funds take from you each year of the whole amount of that you've invested. Typically, this ranges on an index fund or an ETF from 0.1 to 0.3 on average. But with an actively managed mutual fund, you're looking at, on the low end, 1.5%. So again, we were going from 0.1% to 1.5% to up to 2.5% or higher. This financial, like the nitty gritty numbers might go over your head about how impactful 2.5% MER is, but I assure you these numbers compounded are extremely significant. So that's my thing that I came here to tell you today. In my opinion, I'm not going to tell you what to do, but I'm just going to let you know I do not invest in mutual funds at a bank. I do think banks have a good purpose. I think that they can help you kind of have a relationship and a barrier to entry to your money, because it is a restriction. They actually place restrictions on your money. And I do think the GICs that banks offer are usually a good rate, especially with the interest rate environment that we've seen in the past couple of years. It's coming down, but if you're looking for GICs only, sure, invest in a bank. But if your investing knowledge is expanding past GICs and you're looking at purchasing mutual funds, I would advise you, and this is from one person's knowledge and advice, maybe look towards an online brokerage where you, like for example in Canada we have Questrade or Wealthsimple, where you can be paying a tenth of the MER, which is mind-bogglingly expensive. And I know that there are arguments to be made for investing with a financial advisor. For example, they will calm you down during market volatility. They will ensure that you have a pre-authorized contribution so you can invest this much money each month. You can do that yourself. Sure, having a relationship is good, but I know that for myself, I do not have the funds available to be giving 2.5% of my portfolio to a manager each year. So that's kind of my big PSA. That's what I've been telling my friends, my family, my fiance, and helping them, or not, everyone does their own thing. I'm not controlling. I'm just saying, hey, I woke up to this MER thing, and it's a pretty big thing, and if you read the fine print, it's there and it's real. So you are paying other people to actively manage funds for you, when in reality, a well-diversified indexed fund or portfolio will have enough diversification that you might even outperform the actively managed funds. If you have any questions on this financial jargon, comment below what you're unclear about. Do your own research. ChatGPT is unbelievable. I'm not saying only invest in equities. You should have a broad diversification into bonds, into commodities, into equities if you're of my age, which I think most people are that are on YouTube watching me, at least. That's the important thing that I want to say. So I hope that impacts you. I hope that if you are listening to this and you have mutual funds in a bank, that you might consider doing your own investing, because over the long term, it's thousands, if not hundreds of thousands, if not, if you have enough money, millions of dollars that you could save by investing yourself, which is a fun piece of information. And one of the reasons why I left banking, because I ethically couldn't for myself bring myself to push mutual funds on people. We had sales targets as well. And that's just a little glimpse into the big banking world. I don't think the higher ups would love this video, but I don't think they're watching either. So if you gained any value from this video, let me know. I'm just building out pieces of content and areas of talking that might resonate with people. So if this is something that resonated with you, make sure to engage with the content, and I would appreciate it, just so I know what I should be talking about in the future. Thanks for watching. I'll catch you in the next one.